Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss hedging strategies and paying off student loans.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4%.
You asked the exact same question with two words different.
It's like, fuck, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight. The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, February the 13th, day before Valentine's Day. Get your little love bugs. SPY. I mean, we're going to talk about it till it's not doing this crazy shit anymore. I mean, what we're seeing this week, I mean, we looked like it was about ready to go back to all-time highs again. It about hit that 460 mark, and then we're back down below 450 again. How are you playing it? I mean, I think this is the most fun I've had trading just like intraday SPY options, up, down, everywhere you can do it. What are you thinking about it?
This shit's nuts. So it's a Friday right before 12 when SPY was at 448.30. I started accumulating. I'm not big here, but I started accumulating May 20th, 490 calls.
Oh, I got late March 480. I've had them for a hot minute. Not to brag.
Damn, son. Yeah,
okay. Maybe jumping
So,
the gun, but we'll see.
I just, you know me. I like a little bit of time, so I'm okay with May. I'll chill. I might, that being said, I have about 1% of my account in there. So,
nothing big for me either.
No, dude, only like 85%.
I don't know what the American economy is going to do. I'm not putting my money in that.
I don't trust her that much, Especially the Fed, man, like it feels like I'm trying to look for the right words without dissing our men that keep the economy stable and who made us a ton the last 2 years, but it just feels like they have no idea what to do. And I get that because in one scope of things, for anyone that doesn't understand, let's run through it a little bit. On one side of things, inflation's high. Okay, inflation's very high. If you don't watch the news and you don't really know what's going on, inflation's extremely high. So you have an administration who's saying that people are feeling inflation at their dinner tables. That was Biden's exact words, that the American people are feeling inflation on the dinner table.
You remember, was it 2 years ago when the Thanksgiving or the July 4th picture where it was like the cost of a July 4th cookout's like 11 cents cheaper this year?
Yeah. And now Biden's words were that the American people are feeling it. So that's where, again, the Fed steps in, and the Fed is basically like a balancing act. When the economy is strong, they stop spending. When the economy is weaker, they step in for to increase the expenditure. So when this happens, you're really inside a tough spot, because if you raise rates extremely fast, then you're going to send us into a recession. If you don't, then then inflation is just going to go through the roof, and we turn into Venezuela. Now, I personally think that anything below 9.5% for inflation is okay. And the reason that I say that is because we're close and inflation is raging. But here's the thing is that once inflation gets going, it's kind of like a truck rolling down a hill with no brakes. Like once it gets...
Fuck, I want to make the joke. What is it, Nikola?
Yes, exactly.
It's like
exactly.
the Nikola truck.
Yeah, once that truck kind of gets over the start line, if you will, it's really hard to curve it, especially when you're inside like an economic driven downturn like the pandemic, which, you know, obviously closed businesses. So the Fed is really inside a tough spot right now. Now that being said, every single comment every week is literally changing. And I personally think that there's too many cooks in the kitchen as far as the Fed goes. I mean, you got like, one week you have literally 10 days apart. I think, what's his name? Not Jose Quinceañera. Who's the guy on CNBC?
Oh, you're asking the wrong guy, pal. Stephen A. Smith?
Yeah, I'll look okay. Oh, Carl Quintanilla. On CNBC, he used to work for like NBC News or whatever, and then he went to CNBC. So he posted something about Bullard's comments 10 days apart, and 10 days. So I believe that would have been last Wednesday. He said, and this is a direct quote: Bullard does not really think a 0.5 basis points will really help us. And then obviously, as we all saw on Wednesday, Bullard came out and said that he sees the first one happening real soon and that he sees 100 by like June or July. That's wild. Like that is like a toxic relationship. In fact, that is the most toxic relationship I've ever heard of. I mean, it's basically like, no, like, nah, like we don't want her. And it's like, baby, come back. Yeah. So that's so that's where like my thing is that it should really just be, Powell is the only one who should really comment, in my opinion. And I also believe that, you know, everybody knows that rates are coming. So that's where the whole SPY thesis comes in. Like Wednesday's sell-off was ridiculous. Or what was that? Thursday's sell-off was ridiculous, in my opinion. It just scared the market, and that's fine because we were at a resistance zone. Right now, as I said, I think that we are at lows. I would be shocked if we saw 440s again. I'm gonna go out there saying that we see 475 before we see 440s. And obviously, you know, on Friday we were sitting at 448. So, yeah, that's 2% versus like a good little 7%. So that's my thinking. I still think that SPY is kind of on like a launch pad. I think that even 100 basis points, I think is priced in. And like I said, is that on dips I'm accumulating, and on rips I'm selling all the way to 475. That's how I'm playing this.
So even on these little pops throughout the day, you're saying, hey, I'm not, I don't know what the market's going to do, a few months from now, but I like this risk. So you're scaling out when you see a chance, even if it's just a couple percent in the market.
Yeah. Oh yeah. I mean, the range inside the market right now is ridiculous. So I don't trust her for a second, but I don't trust her for a second. But that being said, I still think I'm still preparing for for SPY, going towards all-time highs, just because like all this is nonsense. I feel like this is all accumulation underneath, and now that like all of retail gets bearish, that's when I really start to bull up overall. Like that's when I really like to bull up, because retail misses the what was it? It only took us a week to get down to like 430 or something, and then it's like everybody buys the dip, and then they bring us down lower, and then retail gets bearish. So then that's when they fly us back to all-time highs. That's personally how I feel. Now on Monday, the Fed is having an emergency meeting. Now, what could they do? Honestly, I want them to hike, 25 basis points. I'd be okay with that. In fact, I think that's super bullish. like a macro perspective. Like start to curb inflation and just get it over with. Like it's one of those things where it's like, you know that you need to do it, but you're waiting to do it.
Rip the Band-Aid off, yeah.
Yeah, rip the Band-Aid off. And the thing is that like the Band-Aid is fine. Like the Band-Aid is fine. Like we all know that it's
there's
coming.
An infection under there.
More, yeah, well that's the thing is that like you know what's under there, and you're literally just not doing it. But you know that once you rip the Band-Aid off, that
there's like a tumor under there. You're like, okay, as long as I keep this Band-Aid on, it's fine.
But that's the thing is that like you can cure the tumor by taking the Band-Aid off. Like that's what this feels like, is that like the Band-Aid is contributing to the tumor, and you just won't rip the Band-Aid off because you're like, I don't know if I really want to look at this. And I get that. Like nobody wants to look 7.5% inflation, but guess what? We went through a pandemic. Like what? You thought that like us giving the American people thousands of dollars and shutting down businesses for months was just like we were just gonna roll that up one day and just like
quick
be
little
okay
break,
with that?
dude.
Yeah, that's what people thought. Like we're just gonna come back. No, there's consequences to everything, and on the economic scale, like
it was just to give the American people a break, dude. I saw this stat that was like, I think it's like average Americans get less vacation time than like 16 like century servants or some bullshit.
But that's the thing is that like I just can't believe that like even on Thursday I'm reading shit about like I'm reading stuff that like people thought that like inflation was at like 5%. No, like we knew that inflation was gonna hit high. Like okay, even you want to complain about the 40-year high on inflation? Why? Like why? We know that inflation is that high. Like what? I don't understand. Like why didn't you expect this? Like we closed the country down for months. I don't know. That's just me. I feel like all this is starting to get a little priced in, and all this is like really starting to piss me off. Like the Fed, listen, if the Fed listens to PGIR, we can have a don't know much, but yeah, the Fed. But you know, Bullard, if you're talking, I mean, if you're listening, that really wasn't cool. That felt a little toxic of you to say 10 days apart, but you know, we'll handle it.
All right, well, glad we could cover that.
SPY made 490s
right now, except for I just went up like 20%. I missed something.
Oh, that would be so sick.
Yeah, dude.
We would not be recording this podcast.
Our calls would go fucking buku.
Yeah, like probably like 1,000, 10,000%, something like that.
Yeah, no, they wouldn't do bad. That's for sure.
Probably not.
No, but so I guess kind of like as we kind of get back into like, oh, what's market gonna do, blah, blah, blah. But, you know, no one's ever really positive. So one thing, you know, we like to let people know about is hedging. So what's a good way to hedge like in this market?
Yeah. So volatility is a tough thing. So if I were going to hedge, it really depends on what you're hedging, right? Like if you're hedging your entire portfolio,
it would have gone great with SPY puts earlier in the month, you know.
Yeah. The thing that I personally like to hedge with is volatility, because when volatility breaks out, like think of it like inflation. When volatility breaks out, it is massive. So think about the VIX. The VIX will stay underneath 20 and not really move for months at a time, quarters at a time. And then all of a sudden, you know, you get something like, and I'm obviously the pandemic is again an outlier, but you get one of those outlier, you know, headlines or something, and the VIX flies like 20, 30%. Now that's just on a headline. Now, if you get one of those like really crazy things, like God forbid that, you know, the chief of the free world dies or something, you know, something like that, volatility, specifically the VIX, would probably go to like 80. it would go up like 200, 300, 400%.
Hey, NSA, no, it's just us. It was a hypothetical. We're not planning anything. Sorry.
Yeah.
Thanks for checking in. Hope everything's good.
Sorry
about the whole.
We said God forbid.
Yeah, sorry about the whole Edward Snowden thing or whatever. Those guys are fucked, dude.
Yeah, they're the worst. Yeah. We love NSA.
We love the NSA.
Yeah. So God forbid something like that happened. That's one of those things where you can take far out of the money leaps on volatility, and God forbid anything catastrophic happens, volatility would go absolutely buco. Now, if you're like a day trader, like a shorter swing trader, obviously you're not going to hedge your positions with the VIX because you why would you? That doesn't make sense. That's more for like institutions, funds, hell, even your 401k. But if you're a day trader, you hedge most of this stuff with how you manage your risk. That's how you hedge all of this. If you have a systematic approach and let's just say you have a 70% win rate and you feel that the stock is going to do this because it does this 70% of the time and you're going to take profits because you're only looking for 1 or 2%, that is really great. And how you manage your risk and how you hedge is using good risk management. That's the only way. Now, you can do things like if you're like a bigger holder of a stock or something, you can sell calls to collect the premium, or you could take puts if you like really, if you really want to go crazy with it.
Yeah, but, I don't think buying puts is even going crazy with it, especially like having a stock that you're big on into earnings, especially if you're long on it. I mean, you're
like if you have like $100,000 position in something, like you got to buy like $10,000 worth of puts.
No, well, I'm not saying hedge it the whole thing and expect it to drop 15%. And if it does, your puts are going to make up for it. But at least make the wound, not as bad. Hey, I know the earnings report wasn't as good, but at least my puts are going to go up 70%.
No, that's a good point. But yeah, if I was a day trader, the way that I handle those kind of things is that you hedge it with risk management. I think that's the utmost important thing. And listen, if you're like watching this and you're like worried about your 401k or stuff, listen, call up whoever manages your 401k and tell them that you want to buy like some 2023, 2024 VIX calls, you want to buy some like 40 VIX calls. You just want to put like 4 or 5% of your account in there, don't even do much. Just do like 2 or 3% and just hedge it like that. That's the way that I would handle it. And then that's a really good way to hedge yourself to your 401k, especially like if you're getting older and and you're getting close to that retirement age and you still want to be aggressive, but again, God forbid, because one of the biggest things with the 401k is, and any any managed portfolio, is that it takes a long time to get out of those positions. Like us as traders, I can click a button and be out. Your 401k, you got to get your financial guy, your financial advisor on the phone. Then you got to get, then he's got to do it. He's got to put in the order. The order might not fill or execute until tomorrow. So like a lot of stuff has to happen. And of course, if you're not one of his bigger clients or something, you're not going to get.
He doesn't give a fuck about you.
Yeah, well, I mean, he's just not going to. He's not going to pick up your, like, if he's got, if I got $100,000 with him and someone's got 300 million, like whose phone call is he going to pick up? So that's why. That's what I see as the biggest downfall of having a financial advisor. Like, I think financial advisors are great. It's just that, if the president, again, God forbid, the president dies tomorrow.
We're making a lot of assumptions about the president passing away.
Yeah, we're making a lot. I know. I was watching like Air Force One videos last night. So all they kept saying was like, God forbid. Yeah. So God forbid, something like that happens. And you can't get out until the next day, or hell, 2 days later. I mean, the market could be down 12, 13, 14%, your 401k will wipe out. Like your 401k will wipe out a year or two of progress, maybe 3 inside no short time. So 2% of those VIX calls will super far out of the money. And hey, if they go expire worthless, great, because that means that your portfolio probably made like 10, 15%. So that's good. That's all.
All right. Well, okay. If you're day trading, I know you basically said the only real hedging, or not only real way, but the best way is just having a systematic approach. Do you think there's any other real way for, a main day trader to kind of still be able to hedge, let's say, that they are in let's say SPY calls or day trading those, or even if you're just day trading a regular position, is there really anything they can do to kind of protect themselves from a crazy downfall? Or is it just hey, puts, SPY calls, whatever?
Yeah. I mean, that's the way to do it. And I will always think that managing your risk will be the biggest part of it. But if it's not managing your risk, then then have those SPY puts on, start accumulating. If you're like a pretty big day trader, let's even just say that you're like someone who, you're right underneath PDT and you want to manage, you want to hedge yourself overnight, stuff like that. You start accumulating 4 or 5 month out puts and do it that way.
All right. Well, moving on to, tax season is coming up. So let's talk about another thing, spending money on something you don't want to spend money on, but you kind of have to. Student loans. Not a fun thing, but paying them off is definitely something that people are having to do. I know a lot of traders did it last year. They banked on 2020, fuck accumulating your gains. They're let's pay off these student loans. What are some ways for the average just dude? Maybe they're trading a little bit. They want to put that extra money in their account, but obviously they have their student loans as well. What do you kind of recommend to that guy?
Yeah, you got to get rid of the debt first. The debt has to be the single most important part. Because that's going to be the thing that's always inside the back of your mind, always. So I would get rid of the debt. If you want to, if you have a steady, stable income and you want to do something where, let's just say you make $5,000 a month and your take home is $5,000 a month, which is a healthy amount of money, then what you can end up doing is that take the money that you make and first pay off. If they require you to pay off $1,000 a month, always do more. So do $1,400. Then take the $600 and put it inside your trading account. And then, if you save $500 a month, put that inside your savings account, and then maybe spend $1,000. So make sure that the biggest thing that I can say is that always make sure you know where your money's going. Don't just frivolously spend. So always put inside the accounts that need to be had first, and then take care of it that way. That's what I would do.
All right. So now for a little Q&A. This is from Teach 'em Stoic. They're asking, who is manipulating oil and gas future prices? Is it government? Is it Bloomberg? Is it natural gas producers? Is it a hedge fund? Is it my broker? Is it CNBC? They have a lot of assumptions. But I know a lot of people say they a lot. It hasn't been said as much recently because everyone's more oh, fuck everyone. This market blows. But who is they? And when are we going to kick their ass, dude?
Yeah, I mean, yeah, they sucks. Yeah. So, see, this is a tough question because you have market makers and then you have big funds. They is loaded. They is definitely loaded. And then you have, you got retail. I mean, those are the 3 big inside the space. So when it comes to oil and natural gas and stuff, a lot of that comes down to the numbers, but it also comes down to, who's controlling the contracts. So a lot of times you can get, what am I looking for? You'll see in the middle of the night and stuff, not the middle of the night, you'll see off open and stuff, you'll see imbalances and stuff. And that's market makers, changing the different, changing the different contracts and stuff like that. So the market makers typically, but again, a lot of that comes down to the oil supply itself. So what you get per barrel and stuff like that. It's not going to really change that drastic. Most of the time you can anticipate the move in oil and stuff, but But overall, it's not like somebody's like, manipulating oil. Like,
yeah, long story short, we don't know
down.
who the fuck they is. They is like the ref. Like when your team loses and you need someone to blame, like it's them. It's them. That's who they is.
All right, here we go. The tweet that I sent out maybe like a week ago got 300 replies, and one of them is from Starving Whale. Stop losses on options. They swing so crazy. Every trade I have been up 125% on was down 38% at some time. I've never understood the stop put of a trade principle with options. Make
Dude,
good traders at
try
key
and
levels.
read is awesome, man. We should have an episode where you just try and read a page of Harry Potter.
All right, I'm just trying to I want to answer the question
Just
the second that I read it.
Then okay, we're gonna skip this word. We're skipping that one too.
Okay, here we go. All right, you know what? Fine, fuck. I'm gonna restart. All right, this one's from Starving Whale. Stop losses on options. They swing so crazy. Every trade I've been up 125% on was down 38% at one point. I've never understood the stop put of a trade principle with options. Make good trades at key levels for your edge is my strategy. Your insight would be appreciated. All right, so Starving Whale. The biggest thing is that if you're seeing that big of a movement, something tells me that you are probably choosing cheaper options that are either far out of the money or close to expiration or both. My thing is that I can't take those kind of swings. Like if that swing is happening on like a 1 or 2% move of a stock, then you need to go further out, bro. You need to go further out. You need to go like maybe a month or two out, and at least. And then the other thing is that one thing that I like about TD's options is that you can place them at key levels on the so you can put in an order for the option, and it'll show up on the bigger underlying equity chart so that you can see where it'll sell at based on the Greeks and where everything's at right now. So I personally like that. I enjoy that feature, especially because options do move so much. So I like to have my orders already out. Does that make sense? So I would go further out, and then if you use TD, I would just, if your key level is $100 or something, I would make sure that the option is laying at the underlying equity of $99. All right, so this one's from, oh wow, this kind of sounds like my mother, honestly. Trading Mama H. It sounds like something my mom would make her username as. Anyway, Trader Mama H.
Why is that one host so handsome and sweet and smart?
Says, how to know when a stock with news will go or just pop and fade. I know it takes volume, but some people just have that instinct to buy and know it will rocket. Oh, actually, you know what? Fuck yeah, I like this one. Okay. You want to go first or me?
All right. Well, I think looking for what the news is, obviously. And we had an episode a while back on, basically this question on like what news is worthwhile, which price targets are you looking for? Obviously, if there's a $15 price target and it's $2, don't go too into that. Be like, looks like I'm early, So I think that's the biggest thing. Don't jump the gun and yeah.
Two things. So the first part is that the traders that I know that are really good and really experienced, they look for two things. One, former runners, and two, former runners. And the second thing is that the news to be really good fundamentally. So it is about the news, but it's also about the stock itself. It's kind of like comes back to what we talk about all the time about personality of stocks. Like it's not just about the news. It's also like if this stock runs before. So for instance, like BBIG runs really well. So when BBIG has news, even if it's fluff news, it still usually sees a pop. If you're having trouble buying stocks that get news and then you're noticing that they drop immediately, my suggestion would be to wait for them to wait to see what they do. If the stock pops, let's just say it pops from 10 to 12 and then it comes back down and then it's starting to go over 12 again, you can buy that breakout. Or really the best strategy would be to, if the stock goes from 10 to 12, comes back down, goes back up to 13, comes back down to 12, that would probably be your support, and that's where you could buy and then keep your stop loss tight to there. So the one thing is that I would stay away from, and I would look at the daily chart, I would stay away from anything that's not a former runner. The other thing is that I would really focus on really good news. So fundamentally sound news. To me, that's the stuff that is going to run if it's going to run at all. And then if you notice that this thing runs like 200-300%, and you can look back at obviously at the old news, and if it ran like 200-300% on not much, that's really good. And then the last thing I'll say is that look at its prior dilution and look at its current dilution. If it doesn't have any warrants or anything, that's a really good sign. But if you look at it and it has warrants and maybe like a shelf offering, I probably wouldn't touch it. I would stay away from it. Really good question there.
All right, dude. It was awesome seeing your reading, go from like a third grade level to like a sixth really quick. I'm really impressed at how fast you learned and got better. And I think the last thing is Manscaped's got me smelling good, dude. Have you got the new pack thing?
I got the new pack. I haven't tried it.
Oh, dude, you're missing out. Although the other day I did like something pretty stupid. I used the body wash on my hair.
Why'd you do that?
I didn't mean to. I was just the bottles looked a little similar. So yeah, whatever. Had to take another wash, but all good, dude. An extra shower never hurt anyone. All right, guys. Well, thanks for tuning in. Make sure to like, subscribe, give us those juicy 5 stars, and hope everyone has a great trading week, and we'll see you all next time. Take care.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.